download number 118. No, you're not on repeat. It's Andrew and Michael for round two this week. G'day, Michael.
Oh, does life get any better than this? Absolutely.
Depends on who you're asking, Mrs. Doherty, Mrs. Violent.
Yes.
Anyway, good morning. And we promised you last week that we'd have an in-depth view as to what happened in 2016. I frankly have done no homework. You've probably had about as much time as I've had to do homework. I'm working school holidays. So as a consequence, we've done a little bit of a quick roundup from a numbers point of view. Probably the most interesting thing that I didn't realise, Michael, is we've moved like 800 points between the high and the low for the year. So back in February, it was about 4,700. And in fact, we're within about 100 points at the moment of our 12-month highs. That's pretty big movement for the last 12 months.
Yeah, and we sort of touched on it, Andrew, last week, didn't we? It's been a very big year, and, you know, the political goings-on around the world have really made the market a very volatile place. And yeah, you know, the ranges have been extraordinary. I mean, even some of those days, you know, we've been down 4% only to finish up, you know, 1% by the afternoon. So there's been an enormous range and volatility in the market.
That Brexit day, of course, which Heather's madly, vividly remembering. You know, Heather came in and helped us with that special video of the day after Brexit, and it was just bat crazy. You know, like it was all hands on deck that day. And then, of course, even just last month, you know, with Trump and those US futures going down 800. And then the next day, you know, up 200. So in other words, 1,000-point turnaround for the day. And I think I think we may have touched on this briefly last week, is, you know, a lot of the trading is actually algorithmic trading now. You know, it's all computer-based trading. You know, you and I only are accounting for around 15% of the trades. 85% is being done by computers, which, I mean, Andrew the nerd, I love computers, but from a market integrity point of view, you just sort of have to wonder whether, even this week, you know, we saw Certex, you know, SRX, halve, literally halve. And it's gone from $12 now back up to about $16, $17. And sure, that's some people panicking and selling, but I think a lot of that volume and a lot of that selling is actually computer driven.
Yeah, oh, look, absolutely, Andrew. And I think, you know, the integrity point is what investors, I think, struggle with these days, because, yeah, as you say, when you're battling against computers that are just running formulas day in, day out, you know, we've had big increases in short selling and derivative transactions. I mean, that the market's just full of artificial, synthetic bits and pieces, and it makes it hard for mum and dad investor to sort of try and sit back and get any real gauge as to what's actually happening, and the ride's, you know, bumpy along the way as well.
And then you overlay that with, say, a Bellamy's as an example, you know, whereby Bellamy's came out with a profit warning 2 weeks ago. Shares are now suspended because they're trying to, well, in fact, they haven't really told us why they're suspended. They're just going through their numbers, it would seem. So, you know, between algorithmic trading and formulas, can't say it, and, you know, plus also not concerns around management, but, you know, our management sort of keeping the market fully informed. That's certainly one of the questions that, you know, being asked about Bellamy's today. It makes it very tricky for the investor out there to try and make an informed decision. So again, coming back to the volatility, you can certainly understand that volatility. Yeah, I think we just want to briefly touch on our final Dornbusch download for 2016, is just around the impact that Trump has had on our market over the last even 4 or 6 weeks. I mean, it has been profound.
It has, Andrew, absolutely. I mean, I think we started the year at, 5,300. We were probably a bit lower than that when Trump got the green light in, and, you know, we've banged on 300, 400 points in that period of time. So, I mean, look, he's obviously come to the marketplace, spruiked a lot of spending, tax cuts, you know, government projects, which all sounds wonderful, no doubt about it, and that's, you know, got the market reasonably excited. Can he deliver? I guess to be seen, and it's a big watch this space, of course. But look, I'm sure, like yourself, everything I was reading leading up to the election suggesting that if Trump got in, it was going to be catastrophic and markets were going to go into free fall. They did for a bit, of course, but they recovered basically the next day. But it's been pretty much the exact opposite, really. So.
Surprisingly. I think the other really interesting part is that it doesn't seem to have too many career politicians taking all these different secretary positions. You know, he's got the head of Exxon, who's going to be Secretary of State, and you know, it's going to be really interesting to see how these people, including Trump himself, who've got no political experience, dealing with the bureaucrats, dealing with politicians from overseas. The Chinese is an obvious one, and the impact for Australia, how that's going to play out into 2017. So we won't do too much of a 2017 one today. We're going to give ourselves something to talk about in early January. But look, our final comment on behalf of Michael and I and Dan and everybody else at Dornbusch Partners, we want to wish you a very Merry Christmas, a prosperous 2017, and thank you very much for your support, your kind comments, pulling us up in the street, telling us how we could do this better. It's been really appreciated.
There's been a few of those.
Yeah, probably more so. You know, Michael's doing a great job, but what are you doing? Why don't you wear a tie? You know, all this sort of really positive feedback. Thank you very much. But in all seriousness, Merry Christmas. Thanks for your support. See you next year.
Thank you.